Joining us for a closer look at what's played out on the market scene today is Zwelakhe Mnguni from Benguela Fund Managers and Nick Kunze from Sanlam Private Wealth. Gents, thanks so much for joining us again.
Thank you.
So Budget 2.0, Budget Take 2 finally being tabled. Let's just start off by getting your general reading of what we got today, Zwelakhe.
Look, I think he made quite a good balance of trying to get a budget to balance. I think one thing to note is that the 2% has gone away and we've got a 1% going through. I think it's positive in that it is phased. The 1% 50 basis points this year, and then next year another one. And then if one looks at the effort they're making to try and support the poor people in the country, I think that's positive. I also think that the effort to retain, or at least to balance that budget deficit around the 6% level, I think that's been good. But more importantly, I think there is a big assumption about growth that is, for me, a big risk. I think they said they expect 1.8 growth going forward. So growth is low now. They expect it to grow to 1.8. I think there could be a risk to that unless we actually see the environment ease up and essentially the private sector comes through and invests, and we're seeing a bit more activity on that side. So I am positive about the budget, but I'm a bit cautious that if you don't get the growth, your deficit might widen a bit.
And Nick, what are your sentiments around that? Was this a growth budget, and how would you say that markets have received the budget? I mean, I know we did have US inflation numbers as well that would have also swayed markets.
So, looking at the face of it, I agree. The budget itself was reasonably good, but I think I certainly feel there was a sense of optimism before the budget that we're going to get something like really strong growth. They're going to come and make a concerted effort as a GNU to say we've discussed it, we've realised we can't keep on raising taxes. You've seen the pushback from the left to the right. I mean, even within the GNU and within the ANC itself, some of the ministers pushing back on VAT. But, yawn, they did VAT. They did it 1%. They needed to make a bold decision and make some hard decisions. They didn't do it. And I'm also a little bit baffled. 1.8% growth, like from where?
Yeah.
Where's that coming from? I mean, they have a history over the years of certainly over-promising and predicting these growths. They never get them, and then they backtrack in October. They try to budget things saying, well, revenue wasn't there. I mean, we managed to squeeze out 1.6% growth with no load shedding.
Yeah.
We got higher than that with load shedding at 0.7, so we're going backwards. So 1.8, there's your risk right there. I couldn't agree more. You're not going to get that. This wasn't a pro-growth budget. In fact, I think they took the easy route out, quite frankly.
And that was, my biggest question was around growth actually being prioritized, because it didn't seem like that on face value. And I thought, maybe let me ask the experts. Let me put it to the experts. But yeah, clearly my thoughts.
Just to add before we move on, just to add, I think there was definitely, if you judge what was happening on the sort of the floor on the street, there was definitely an incentive from all walks of life to say, you know what, it's time for a pro-growth budget here. We actually need to make some changes. And I think there was definitely a bit of support from the population to do that. And they didn't. So disappointing.
I do think that, like it says, there is no effort to get out of the dependence of these grants.
Yeah.
The youth need jobs. I think everybody would rather take a job that pays them more than 350 than get a 350 as a long-term plan. I think the fact that there is no plan to get out of that was actually quite disappointing. There is no way forward that they put forward to say they can solve this problem. So I think, it's a major thing, and I think if those people don't get more than the 350, your consumption expenditure, which is a big component of your GDP, basically lags.
Yeah.
and you're not going to get far. I mean, if consumption expenditure is not big enough, companies are not going to invest, and you basically, the two legs of GDP are starting to struggle, and then you're not going to collect enough tax revenue as the government, therefore you can't spend more, and you're hoping that trade can bail you out. But I mean, we've got now frosty relationships with some countries, and we definitely might not get that pickup on the trade. So it just gives you a sense of concern around where is the silver lining going to come from?
How are we stimulating this growth? And you're talking about trade as well. We also have, not great systems with the Transnet also in a recovery process. You also mentioned the 350 and social grants. And I want to just bring it back to the issue around VAT. And yes, it seems like we've reached a compromise with us only getting a 0.5 percentage point hike this year and another 0.5 percentage point next year. I just want to talk to you about the impact those hikes could possibly have on inflation.
Yeah, I mean, it'll definitely, you'll have a once-off step up in inflation to accommodate that VAT. I think some guys are estimating that it would be probably 0.5% step up in inflation. But more importantly, I think they did try to zero rate more a bigger basket of goods.
Yes.
And I still believe that it is not enough, because the middle class will probably get squeezed even more. Maybe you're trying to protect a bit on the lower end and you providing them with a grant. But the middle class is getting squeezed, and I think companies are struggling to pay more than inflation, and you getting the middle class decimated. That's a risk for this country in terms of the growth.
The middle class getting squeezed, and of course that, the people that are actually paying the tax, right, Nick?
Well, I mean, the middle class today, if this budget gets passed, just got poorer. There's less spending capacity, and I think if you bring it a little bit closer to the financial chat on the show, look at the results from Woolies, look at the results from Cura. I mean, that's your middle class. Your middle class has been decimated, and we're still sitting with interest rates at 7.5%. So there's a lot of tough things out there. We speak about obviously the poor, which is very concerning, but the middle class, which fund the budgets and the 350 for the poor, there's not much spare capacity left there anymore.
Hey, we'll see what happens, because of course it will be debated in Parliament. Let's get into some of the other market action we saw today. As mentioned at the top, we are seeing inflation in the US cooling to 2.8% in February. That, I guess, not enough to change the Fed's wait and see approach come, I guess, next week, right, when they meet again. Zwelakhe?
Yeah, I think I remember the Fed chair saying, inflation is not there yet. I mean, those were the words. And I think we probably will see like a cautious stance. I think the numbers were better than what was expected. I think they were expecting around 2.9. So they came in at 2.8 on the inflation. But you also have to look around and say, with this tariff environment, we're likely to see a bump in the road as we get this tariffs taking effect. So we might see that inflation looks okay now in the US, but we might see it pick up again. It would also be like a VAT year. It would be a once-off, but it will be meaningful to contribute to inflation. So I cannot see the Fed moving, and that's a downstream effect from that. Is that would the Fed move on the rates with that picture? No, inflation is above their target of 2%. There are risks that tariffs would inflate inflation effectively, and you're going to end up with quite a bit of risk on the upside. And unless the economy gets into trouble, I cannot see them going aggressively towards continuing with the cuts. But we were talking in the office the other day that the middle class in the US as well has also just taken a lot of pain. And you actually exacerbating the pain with all these tariffs, because there is a big misconception by the Trump camp that the foreign companies or the foreign suppliers are paying the tariffs. The tariffs are paid by the importer who then pass on to the customers. So it will feed into inflation. To what extent, it depends on how much margin loss does the importer want to take. But I do think there's a big risk of inflation in the US picking up a bit, and therefore forcing the Fed to stand pat for a little while. And yeah, I think the market had a relief rally today, primarily because I think we can't say negative forever. But yeah, I do think there's a bit of risk there.
Just before I get your stock pick quickly, I just want to get your views around just the recession fears that we've seen resurface. Were those warranted, Nick?
Yeah, I think they are. I think that the numbers that have been coming out of the States, the data points, are certainly implying a economy that's slowing. You can never really forecast when it's going to happen. Recessions you can't forecast. They sort of come before you know it. But the data is certainly starting to imply that there's a slowdown, and for me it's a worry that the recession slowdown. And look at things like airline stocks and things like that. They're forecasting that their passenger numbers are slowing down aggressively as well. So a lot of factors are pointing to a slowdown. Put that on top of a US market that historically is expensive. And you can understand why people are getting nervous and the market is selling off.
All right, Nick, Zwelakhe, unfortunately I can't get your stock picks because there was just so much to talk about. But again, thank you so much for joining us in studio this evening. That was Zwelakhe Mnguni from Benguela Fund Managers and Nick Kunze from Sanlam Private Wealth.